Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Soo-young, professor of business at Chung-Ang University. Professor Song, good afternoon. Thank you for coming on today.
Yeah, good afternoon to you.
Well, despite, let's start with the supply chain disruptions and in the middle of all that, how Samsung Electronics, as we heard a minute ago, has posted its best ever first quarter in terms of sales. Also a record high at LG. Samsung's coming to 63 billion US dollars in sales. What's driving these strong figures at Korea's two biggest tech companies?
In fact, those numbers are estimated because of the based upon the provisional assessment. So it will be adjusted sooner or later. But actually, this is provided for the purpose of the information services according to the International Financial Accounting Standard of Accounting report standard. But yeah, it's quite amazing, and the total numbers as in Korean won is 77 trillion Korean won for the first quarter revenue for Samsung Electronics, and its profit, operating income profit has reached 70.57 trillion Korean, which is amount to almost 9% of profit margin. And for the LG Electronics, they have recorded 21 trillion Korean won, and the operating margin has reached 9%, which is equivalent to 1.88 trillion Korean won. So both situations, I think, is quite surprised, considering the first quarter always relatively the performance of electronics and such digital or semiconductors industry has performed not very well, but this is just, I think, because of the luck, the fortune by the supply disruption, and also further worsening the war situation in Europe. Then so many purchase from Korean industries, electronics has been done by the consumers around the world. So anyway, this is a good news. But as we see there's some performance movement of the stock price of both companies. There is they know that this is just by luck. So therefore, there is not much positive return for this report.
No, indeed. There wasn't much of an impact on the positive side at all. But looking at the broader situation with the Federal Reserve, the minutes from last month's meeting also having an impact on the markets. We see the Fed's going to start unloading almost $100 billion worth of bonds each month, perhaps more aggressive than some had expected. What do you make of the news, Professor?
Yeah, as I see the minutes of the Federal Open Market Committee, and so they originally, the participants in the members of the committee, they would like to set up no caps over the amount of the Treasury securities and mortgage-backed securities. But as mentioned in the earlier report, that for the past 2 years, in year of 2020 March, it was just half the size of the current holding of those securities. So it is right time and appropriate time to start and consider the quantitative tightening, which is the reverse of the quantitative easing, and then most likely to start in July. That's my understanding, and so this would be very stepwise and very slowly, and considering the market functioning of the Treasury securities market. So this is a system market account will be reduced accordingly, developing the situation of the economy.
Right, and looking at Wall Street now, the NASDAQ was off again by more than 2% on Wednesday. Shares of electric truck maker Nikola, for example, down 7.2%. NVIDIA, which makes graphics processors for computers, down almost 6%. Obviously, the news about the Fed would have played an outsized role in that. What's the story in the global equity markets?
Yeah, as far as I'm concerned, recently, today, I have seen the reverse of the market. So the stock market and FTSE has gained momentum, and even for some digital equipment, semiconductor industries has relatively they recovered the price. There is a huge decline of the price recently, but overall the daily fluctuation will be very increased because the current situation and development of the war is very uncertain right now. So as far as I'm concerned about the trend, the war will be terminated by most likely to be by the end of the May, and because that is Putin's the declaration is maybe anticipated of the victory, whatever the result, outcome of the war. And supply chain disruption, clearly it is an issue, but it will be resolved. It will be resolved, and it will be eased. And also, what I'm most concerned in the U.S. Economy is because the labor market tightening is very serious. But I'm not as much as concerned in Korean market, particularly in inflation, as in U.S. The reason is because Korean labor market is not as tight as U.S. That is really clear difference between the U.S. and England and other Korean and other Australia maybe, and those countries.
Right. The labor market's not as tight, and inflation hasn't been quite nearly as high here either. Finally, Professor, let's look at Korean stocks. Foreign investors were major sellers today, and for the first time in almost a year and a half, shares of Samsung Electronics were at a new 52-week low. Tell us about the domestic market.
Yeah, domestic market is currently because our economy relies too much on the international trade, so to that regard, those international trade is affected, influenced by some supply chain disruption and also some geopolitical issues. That's why uncertainty is very large. As long as there is a larger uncertainty from the financial market, it means that some risk premium is very high, and so therefore the foreign investors to be prepared for the upcoming uncertainty. So that's why they decide to sell the shares in the Korean market and then holding cash. And then once there is identified a glimpse of some return of the economy to the normal stage, then they will come back soon.
Well, that's what we all want to see, return to normal. Professor, let's leave it there for today. Thank you as always for sharing your insights with us. We appreciate it.
Yeah, my pleasure.